Go ahead.
Okay.
Okay, thank you and good morning, everybody. Councillor Allen is having technical difficulties. He's going to try to join this meeting as soon as he can. I will call our special council meeting of October the 14th to order at 8:01. We are here to discuss one item, and that is to review our financial statement. Our auditors are present to do that for us. So, is there any declarations of pecuniary interest amongst the members of council that are here? Seeing none, the agenda is pretty simple. As I said, it's to discuss one item. Could I have a motion, please, to adopt this agenda? Deputy Clerk, Councillor Howie, all in favor? That's carried. Okay, moving right down now to the presentation. We've got Richard Stegenga and Veronica Mason with us from Baker Tilly, and they do have our financial statements to present to council. We have the Finance and Personnel Committee have reviewed this a week or so ago. And I'm not sure, Richard and Veronica, if it's going to be a tag team presentation or who wants to take the lead on it, but I'll turn it over to you.
All right, good morning, everyone. Yes, it will be a tag team presentation. I will start, turn it over to Veronica, and then I will wrap it up. So yes, as the mayor's indicated previously, that yes, these financial statements were reviewed with the Finance and Personnel Committee. I believe, though, it was I think on September the 30th or 29th, I believe. So yes, yeah, or thereabouts. So a few minor changes since then, but I believe we told them all to you. So therefore, and then the results of that work lead to this presentation today. So anyways, so without further ado, we will run through this presentation in the PowerPoint version, a little more succinct and perhaps a more readable format than the actual detailed draft financial statement. So first off, we start with the management report. Although it's not in the slide deck, it is the same as the prior year. Talks about management's and council's responsibilities. And then we move along to the independent auditors report, which is our report on the financial statements. And the key paragraph within the two-page auditors report is the second paragraph that, in our opinion, the accompanying consolidated financial statements present fairly in all material respects the financial position of the township of OSM at December 31st, 2021, and the results of its operations and its cash flows for the year then ended in accordance with Canadian public sector accounting standards. So that is your standard clean, unqualified auditor's report. And yes, keep in mind it is done in a PSAB format, which is different than the way you actually set your tax rate budget. So we'll highlight a few of those items and differences going through. So yes, but as I said, standard, clean, unqualified auditor's report, and as well consolidated, meaning it does include the operations of both the township itself and the operations of the library board. Next, just to give you an idea of some of the audit procedures that we do, they remain fairly consistent. Potentially how we do them does differ each year, either being in person or virtually, and it does involve reviewing council minutes, substantive testing, systems documentation, and related internal control testing, and checking on key controls and the various inflows and outflows of your funds through revenues, disbursements, payroll, and journal entries. And then on the following slide, it gives you an idea where things are at with the audit. It's complete pending council approval of the financial statements, receipt of the representation letter, and receipt of legal letters. Overall, there were no difficulties encountered during the audit itself or through our audit procedures. No changes to our initial audit plan. I guess perhaps maybe with some changing people within the treasurer role, though it did create for things just to move a little slower than normal. So as a result of that, but still there were no disagreements. We did have excellent cooperation from your staff, and of course these statements still do include the note for the uncertainty caused by COVID-19. Just one item there on our schedule of unadjusted differences that we are obligated to tell you. There was a payroll clearing account that is sitting there, and it's in a debit balance. And it appears that some entries to allocate some payroll allocations still need to be done. So as a result, though, we weren't aware of exactly what those amounts should be. So that those amounts, since they're not material, they can be reflected in the 2022 statements. But I'm just making you aware that that is one difference that still needs to be rectified in 2022, but it's well below materiality, so we're not looking for an adjustment. So that's where things stand from audit completion standpoint. Not sure if anybody had any questions on that part.
Yeah, I think that's a good idea, Richard, rather than wait till the end. If you have questions, council, put your hands up. I see Deputy Clerk there, and we can try and get answers as we go through. Go ahead, Bonnie.
Yes, I did have you clarified some of that, Richard, and thank you. And I should have said through the mayor. So when you say I accumulated debit balance, so it's sitting there as a positive, waiting for some entries to be taken out of it that haven't cleared yet.
That is correct, yes.
Okay, I just want to make sure that I'm on the same page here. Thank you.
Yeah, and the issue is we don't exactly know where those entries should go. So as opposed to making a blanket adjustment, we think it's something that should be better done in the 2022 year. Your new treasurer can take a look at that one.
Okay, it just seems, I guess in my world, that how are you going to track back, or how would you know what those entries were, or why weren't they cleared? Because you write this is payroll, so everyone is paid every 2 weeks.
Yeah, I think
contracts or something like that.
Yeah, actually, I don't think it's actually direct employee payroll related. I think it's how the benefits get allocated.
Okay.
Yes. Yeah.
Okay, or it could be outstanding, say workman's comp, because you pay that periodically. Okay, that makes it.
Yes.
Clear. Yeah.
Yeah.
Okay, thank you.
Yes.
That looks to be it for now, Richard.
Okay. All right. So now we'll actually turn it over to some of the year-end numbers, and I'll turn the discussion part and the control part over to Veronica.
Good morning. So the slide that's in front of you now are your financial assets as at December 31st. The next couple of slides are going to show you a 5-year history. So here on the left-hand side is 2021, which is the year that we're concerned about now. The rest of the information is there to give you a sense of just the trends in the township over the past few years. As always, your most significant financial assets are cash and investments. You can see there at 4.5 and 6.5 million. You can, I'm sure, have noticed there's quite an increase over the 2020 balance as well. And that's obviously there's a lot of things that factor into the ups and downs of cash and investments, but there are a few large items that are affecting it this year. You did increase your reserves, which we'll see on a later slide, by about 1.3 million. And as well, you would receive some development charges in advance of over $1 million. So that cash is on hand as well. And I'll show you where else that shows on a future slide also. In terms of your other assets, you always have some accounts receivable and taxes receivable each year. Your taxes receivable statistic at the end of 2021, the arrears outstanding, that 579,000, represented 4.5% of total amounts levied, which was down just a little bit from the 4.9% in the previous year. And as you have been historically, it's well below the province's benchmark, which is 10% of amounts levied. And the final line item there, that is an amount receivable from Otonabee Not-for-Profit Housing Corporation related to long-term debt that has been assumed by them. So you'll see you have an amount payable for the long-term debt, which you'll see on a future slide, and this is the amount that's receivable from the Housing Corporation related to that. The next slide. So this is the same information. This time 2021 is on the right, but just to see the trend, you can see cash in green, investments in gray, as I said, are your largest assets, and you can see the overall increase in those over the past few years. And then we have your financial liabilities at December 31st. You did have a construction advance related to the fire hall construction in previous years, which was repaid during 2021 on the first line, OILC advance payable. You do always have accounts payable and accrued liabilities, which are amounts that are generally, it's amounts that are owed for goods and services incurred by the end of the year, where payment's not due until after year end. In this line, making up a good portion of the increase over prior year also is the county portion of those development charges that were received in advance. About 790,000 or so is the county portion that will ultimately, as the properties are constructed, be owed over to the county. And then the following.
Veronica, sorry, if I could jump in just for a moment. Just for the records, Councillor Allen has managed to resolve some of these technical difficulties and has joined our meeting. You just may not be able to see him on the screen. Thank you.
Great. The following line, deferred revenue and obligatory reserve funds. And again, you see a large increase over prior year there. That line includes your development charges that you have on hand, that you've collected from developers to be spent on future projects, on future growth. So that includes your own portion of those DCs that were received in advance. So another approximately 790,000 there as well. You do always have some long-term debt, some debentures that are payable. That line item does include the $1 million payable related to the Otonabee nonprofit housing, as well as your other, like your own debt as well. And also landfill closure and post-closure liability and employee future benefits. Now those liabilities, they're recorded. They're a little bit different than some of your other financial liabilities because they extend quite far into the future often, and the payment for those, you actually raise the funds for those through taxation and user fees and your sources as the payment becomes due over time. So you don't have an immediate liability for the 259,000 and 408,000. Those are funds that you will pay over time and raise the revenue for that as you go. And again, we have a chart to show you a graph of the financial liabilities over time, 2021 on the right. Oh, I see a question.
Just, yes, back to the, I was just waiting, Veronica, through the mayor, if I may. I thought I had my little hand up and I did not. Back to the financial liabilities. So basically in 2020, the accounts payable, if you took what the county's portion that we owe them off, we're relatively the same under that column.
Yes.
And then if we go down to the landfill closure, we are lower our liability there than we there, just by 30,000. It's not a huge amount. I guess even less than that. What is that difference from? Like, I think land closure and post-closure liability, well, to me, that's cost is going to keep going up, but our column is down a bit.
So your landfill is closed. So once they're, after the closure date, there's a 25-year period.
I'm sorry, I'm in county mode and I am not in township mode. Sorry.
Yeah, so it's okay. As you go 1 year along, and yeah, it does say closure and post-closure on the slide. But yeah, so as you go along, you're 1 year closer to the end of your 25-year period. So you paid for the monitoring and the other activities for 2021 already, and you're just that much closer to the end of the liability.
Okay, and just a question, I don't want to get too far in here. Is any of any of those expenditures that were paid for legal?
In the closure and post-closure liability?
Yes.
No, I don't believe there would be anything for legal.
Okay,
Certainly not accrued as a liability.
thank you.
Okay. Okay, carry on.
Yeah, so this slide is also the financial liabilities, the 2021 there on the right-hand side, the accounts payable and accrued liabilities and long-term debt, accounts payable in blue and long-term debt in gray. Those are your largest liabilities, and that shows you the trend over the past few years. Yeah, and you can see the bit of the jump on the blue and the green, which is the obligatory reserve funds related to those DCs we were talking about. And the next slide are your non-financial assets at December 31st. So actually the first number there is your net financial assets, which is your financial assets less your total liabilities for 4.4 million. It's a bit of an increase over prior year. And then followed by non-financial assets, you have tangible capital assets. Those are shown at net book value, which is your historical costs less any accumulated amortization up to the end of December. And always a little bit of inventory of materials and supplies and some prepaid expenses as well. And then
Excuse
I
me,
know-
Veronica, sorry.
Yes.
Deputy Mayor, go ahead.
Yeah, just, sorry, I'm maybe asking too many questions here. The non-financials, that's a nice jump. I like to see assets jump, so that's a positive. It is up 2.3 million. That's significant. Could you elaborate a bit more on that?
Oh, I'm sorry. The bottom line there is your total accumulated surplus at the end of the year. So it's the net financial assets plus your non-financial assets. So a lot of
Okay.
that jump is actually the cash and investments.
Okay,
Yeah.
I'm looking separately, seeing the 17s and then thinking that's separate. Then
Yeah.
4.4 Veronica and thinking, wow,
I'm
we're
sorry.
up to $1 million. Who else can double their assets in 1 year? I better be investing. We better go on the stock exchange.
Yeah, so that's your total accumulated surplus. So it's your financial assets less your liabilities.
Yeah,
plus
so we're right in the ballpark. Thank you.
You are, yeah. And then this slide has kind of the continuity of how you got from the 19 to the 22 here. So you can see the budget actual and the 2020 actual. So you had, now this is stated on a PSAB basis. So your revenues and your expenses as required by PSAB, not as required by your budgeting. So those top two lines, revenue and expenses, they don't include things like TCA purchases. They don't include reserve transfers. They don't include long-term debt principal payments. They do include amortization of tangible capital assets. So stated on a PSAB basis, you've got that surplus of 2.5 million in 2021, which when added to the 19.5 in the previous year gives us the 22.1 at the end of 2021. And then down below, we do provide reconciliation of what that surplus means in terms of an operating surplus. Because of course you don't, looking at the budget number with the 1.3 million, you don't budget on that basis. So then we've got the reconciling items, like you can see in the budget column, budgeted amortization, purchase of tangible capital assets, and proceeds on long-term debt, which would be funding you had anticipated related to some of those capital assets, and how those compare to the actuals. And you can see the bottom line there is 0. And that's because after all of your reserve transfers and everything has been completed, you have no operating surplus at the end of the year, just as budgeted. I guess just to point out, I know there's one large difference there between budget and actual that's probably standing out to you, which is the purchase of tangible capital assets along with the proceeds of long-term debt. Those two items are related. That was related to some projects that were anticipated and not started yet, concerning a few items. Water, recreation were two of the bigger ones. And this slide just gives you kind of a look at how much of your accumulated surplus is tied up as net book value of tangible capital assets. So the blue is the net book value of your TCA. The orange is your total accumulated surplus, including that net book value of TCA. And as you can see, the surplus exceeds the net book value of your TCA. In some cases, if you saw the blue exceeding the orange, you would want to make sure you understood the reason why, whether you had deficits somewhere versus if you were, purposefully funding TCA using significant debt. And then obviously that's not the case in your case. And this graph just gives you an idea of the 5-year trend of the total, again, stated on a PSAB basis, the total revenues for the year in blue, the total expenses in green, and the annual surplus there in gray. And then that brings us to some more detail on revenue expenses. So your revenues for the year, you had budgeted 9.8 million of revenue on a PSAB basis, and your actual revenues were 10.6 million. You can see that there were some increases in user charges, certainly, especially in the building department area. Investment income came in higher than you had anticipated. And as well, the landfill compensation, which is based on terms of a specific agreement and a specific calculation, were higher than anticipated in the budget. And I can pause for a question if you like.
Go ahead, Bonnie.
Yes, thank you. And through the mayor, certainly the landfill with people at home more and keep cleaning and cleaning, we do get the benefits of that here. The investments, why did they go up, our investments? What was the significant change there? Like, I want to know the rationale. Was there interest rate increase? What drove that?
If you're looking at year over year, I think it's due to the increase in the investment balances. I believe if you're looking at budget, it seems to have been budgeted conservatively. Just looking at it, it's budgeted as less than the 2020 amount.
I'm looking at, so when I look at income investments, so we had 80,000 roughly.
Budgeted, yes.
Yeah, and in actual, like, we're out by over 100%, our guesstimate.
Right.
Now, I guess if we look back at 2020, maybe we would have been more prudent to put maybe 175,000 in to get a truer. I'm just wondering if there was another variable or it was just us being, I want to call it super conservative.
Yeah, I don't know what went into your decision to budget for 80,000, but yeah, I was more commenting towards the year over year comparison there, just that, looking back with the benefit of hindsight, with a higher investment balances, you would expect it to be higher than the prior year. I'll let Richard help me out.
Go ahead, Richard.
All right, and it also does include any interest you may earn on your reserve funds, which from a budget perspective, you wouldn't budget anyways. And I think at the end of the year, you had over 500,000, I think, in reserve funds as well. For PSAB reporting, we show it here, but within your budget, it's not something you can use to offset the tax rate because it's going straight into the reserve fund, things such as that. And as well, too, as Veronica said, you did have higher investment balances. And I think, too, you had a number of investments that were locked in before the interest rate dropped in early 2020 with the cut in the prime rate. So I think you benefited from that. And they were already invested at a higher rate. And you realize that in 2021.
Yeah, thank you, Richard. We had that question at the Finance Committee meeting, and it's really driven by two factors. The first is that we budgeted conservatively, not knowing what was going to happen in the investment world. And secondly, we're able to invest more dollars than we had initially anticipated. So I think that pretty much explains it. Thank you.
And to the mayor, it is good news. So
I'd expect a lot more questions if the numbers were reversed. Thank you. Go ahead.
Thank you very much.
So the next slide shows your 2021 revenue, just so you can see the relative relative sizes of your different funding sources. Property taxation, as always, is your largest source of funding. User charges in the province of Ontario are also fairly significant. And then we have your expenses. So you had budgeted 8.4 million of expenses for the year, and the actuals came in at about 8.1. And you can see there, most of the functions did see lower spending than anticipated during the year for a number of reasons. Which when we get to the other slide, some of those might look a little clearer as well, but just things, COVID related reductions, a few staff vacancies and staffing changes, just lower uptake in certain departments on things like training or supplies. Would you like me to pause for a question?
Just around you say the financial, the expenditures, so planning and development. So yes, people didn't go off to, training per se, but is that what makes up the bulk of that 50,000 difference?
I believe in planning and development, there was, I'm just trying to locate that page. There was some budget for official plan that doesn't look like it had been started or utilized during the year.
Okay, and then social housing is we put none in for the budget, but the actual it's a wash. I know with our social housing, but
yeah. So all that's going in there is the revenue for the interest portion on the debt that you're receiving from the Not-for-Profit Housing Corporation, and then you have a related interest expense. Or sorry, that's the expense that's going in, but you have a related revenue as well. I'm sorry. They offset each other. They're not budgeted for, but they work out to zero.
So that's why we don't.
That's why
it's not budgeted, because it's basically a wash. What comes in is what goes out.
Exactly.
Yeah. Okay. Thank you.
So just to move on to have a look again at the relative sizes of the functions, transportation and protection being your largest by dollars spent in 2021. And then this one is the same 8.1 million of expenditures, and these are broken down by what we call by object, so by the type of expense. So there you can see salaries and benefits being significantly down, and that's across several departments. Materials down a bit, which is somewhat offset by the increase in contracted services. And overall, the amortization as well is up a little bit, which is a little bit over budget actually, but that's not a concern as it's not a cash item. So you generally budget that based on, or the budget is adjusted for PSAB purposes based on your prior year amortization, and then the actual amortization is calculated based, which may be different due to additions and disposals of assets.
Go ahead, Bonnie.
Yeah, I'm sorry to be asking all these questions, but I do want to understand the differences, especially. So in looking at our interest charges, is there, like, our actual was about 80% increase than what we had budgeted for? So what jumped out at us there?
That's the same 40,000 for the social housing. That's the line where that shows. Yeah.
Okay, that makes sense.
That was a good question. And one more chart to show you the relative size, salaries and benefits and materials and contracted services as well are your largest types of expenditure at the township. And that brings us to some discussion of the accumulated surplus. I'm going to turn the floor back over to Richard.
All right. Thank you, Veronica. So now we come to slide 19, which gives you a breakdown of the accumulated surplus of your $22 million. And as you can see there, the largest component within your accumulated surplus does relate to the equity you have in your capital assets. Sorry, your tangible capital assets. And as you can see there, that did increase this year. Overall, you had additions. You paid off some unfinanced capital related to the new fire hall, so that all got cleaned up this year. So really, what this number is your $17 million in your net book value of your tangible capital assets, less the debt you have associated with that. So that gives you your invested in capital asset line. So yeah, that's the reason why your accumulated surplus is 22 million, but why you don't have $22 million in the bank. A lot of it is just tied up within your capital assets, your roads, your bridges, buildings, equipment. So therefore, that's why they're a non-financial asset, because you don't normally turn them into cash. And as well too, within the capital assets, you did dispose of some, creating the gain on sale of your capital assets too, with selling the old fire hall as well, creating some of that gain. And then as well, Stewart Hall, that committee balance is still there, declined slightly. And then as well too, the unfunded amounts for employee future benefits and landfill, they are there. And as Veronica mentioned, of course, you only raise those funds when you're going to spend them. And for both of them, you already have them incorporated in your operating budget. So ideally, you won't have to raise any more money than you currently do within the budget to fund those. And then as well to the Keene Cemetery, since it became part of municipal operations and in over the last year or so, it has been cleared off. So then of your 22 million, almost $15 million is segregated into those items. And then what you do have left moving forward are your reserves and reserve funds. And you can see there they are $7.1 million this year, and that is up 1.3 million, almost 1.4 million from the prior year. And that's mainly due to some budgeted transfers within the budget, and then as well too some savings that were completed, that were realized during the year. And as highlighted back on slide 10, your capital assets less your noted funding there, they still did come in lower than budget, creating an operating surplus. So those amounts have been set aside within your reserve funds, and some of your larger reserve funds included in there are your fire at a little over $1 million, general government at 2.5, the building department setting aside for future uses within the building department, and waste management and waterworks are also within there. So therefore that gives you your balance there. So questions?
Go ahead, Deputy Mayor.
Yes, through the mayor. So just those reserve and I guess working funds, other funds, does that have, or are we completely clear now of our new fire hall? Is any of that funding in this?
Yeah, that's all been paid for and cleared off.
Okay.
In 2021 with the sale of the building, the previous building, and paying back the $1 million. All of that has been funded, so there's no deficit in that area, so it's been cleared up.
Okay, thank you.
All right. Yeah, so therefore, yeah, the reserves are what you have to utilize moving forward, and the following slide then gives you an idea as to just how they've grown over the years, which as well too then gives you the ability to complete projects moving forward. And as well, I think, as Veronica had said, there were some that weren't completed in 2021. So therefore, you've set some of those funds aside so they can be utilized in future years.
Bonnie, did you have a question?
Those reserves, if you can go back, yes. So our working funds, fine, we have free access to. The other funds, some of those are restricted in our reserves, correct?
Those are internally restricted, yes.
Yes.
Yes. So the ones that are externally restricted, like the gas tax and development charges and parkland, they're up in the other section of obligatory reserve funds. So then these are the ones that you have control over.
Okay, thank you.
Next, we come to the additions to capital assets this year. So keep in mind when we report these here, these are the actual ones you've paid for during the year, not the ones you put in service. So previously, you'd paid for most of the fire hall in 2020, wasn't put into service until 2021, so it doesn't show up on this buy here. So, but you can see there this year, more so like other years, is except for last year, roads and bridges, largest component of your expenditures in that area. And the biggest single item within there is the work you did on Drummond Line in 2021. The vehicles there relate to the roads department. The machinery and equipment are library books and equipment for the fire hall. The buildings is also fire hall related. And then the land improvements, which are part of your work in process, are the funds spent on the playground upgrades. So in total, that's just a little over $2 million in those amounts. And then when we do a 5-year look at what you had spent and your amortization, you can see a couple, or in 2020, it was larger. And as I said, that's where you saw almost $1 million related to the new fire hall. And then as well, you'd also in 2020 purchased a roads tandem truck and a fire tanker. And then as well too, spent about $1 million on the third line and Valaire's line and a new ice resurfacer. So I do believe in 2017 it was the work done on the arena or the community center. And then the following slide gives you an idea based on the book value of the assets, how much are depreciated and not depreciated. And two, you can see there over the last couple of years, you have built a few new fire halls as well. So that's why there's a lot of green within the building line, and same with land improvements with the additions of the playground equipment. So that is one thing to keep in mind that I neglected to say back on slide 19 is the numbers presented for the tangible capital assets represents the cost or the estimated cost less depreciation. Those numbers, I think in today's value, they have no necessarily real correlation to what it would cost you to replace it. So just keep that in mind. Yeah. And then as well, you can see there the trend in your net financial assets, consistent with what you saw in the statement of financial position. The 5-year trend, you can see there, you remain in the black, and since you were able to set more monies aside in 2021 and in reserves, as well as the higher obligatory reserve funds, then your net financial assets did increase. So, which is consistent with your increase in cash and investments. So, and that's where things ended up at the end of 2021.
Not so fast, Richard. Another question?
Oh.
Go ahead, Deputy.
Yes, I mean, that's our net financial assets, a 5-year trend from 20 to 21. That's pretty significant.
Yeah. Mm-hmm. Yeah. And and that does come right off the one slide on looking at your your financial assets less your financial liabilities. So yes, the increase in reserves, the increase in the accounts payable, and your basically your development charges. So these are monies you've collected, and then is what causing your net financial assets to increase greater than your financial liabilities, and paying off the the temporary loan for the fire hall as well, all contributed to make that $2.3 million increase.
So, and maybe this is more through the mayor, a question for Greg. Do we, like these development charges certainly have helped, and do we anticipate this kind of asset growth in 22, Greg, or is this kind of a one-off? We had a lot going on.
Mr. Mayor, through to the Deputy Mayor, we anticipate some of this growth. I think a few of those particular pieces, so we're going to see more development charges collected for Ambria. Ambria, and part of these numbers, did a prepayment of development
Yes.
charges. Part of our work that we need to do is we need to then take that full development charges, both Richard and Veronica have said, and then we collect it as a whole, and then we need to distribute it to the county, and then as well distribute it within our own accounts, because that development charge is made up of so much for parks and so much for roads and so much for these things. So we have to do the distribution piece across all of those particular parts. So we do expect we're going to get some strong growth in DCs going forward for 2022. The second thing is that I just want to point out, and Richard has pointed it out a couple of times, and Veronica has, is we got very fortuitous in our decision making with related to the fire hall, on the new fire hall. We gained significantly more from the sale of the land than what we had anticipated because of the land values. And the other thing we got, which was unanticipated, if council recalls, we were going to take on debt for the hall, and we got that payment from the province for future modernization types of projects early in 2019, and council made a decision to apply that towards the debt, so we weren't going to carry any debt for the fire hall. So those are specific council directed decisions based on sort of future financial planning that we had an opportunity to have a conversation with council. So hopefully that answers your question.
Yes, thank you, Greg. And so just coming back to that number, basically we've got that 4.4 million. There is going to be some applications and fees paid out of it that are pending coming to us. So it isn't quite the hike it is because there's a bit of pressure on that money when we distribute it.
Well, if I might, Mr. Mayor, we have the money. So
Yeah.
that's the thing, so the money is in us. What we're going to be able to do is it'll be allocated to the various areas, and we have it for our use. So the dollars really won't change, and the only thing that will really change is any payments made outside of the organization.
Yes.
So for instance, to the county, right? So we still
Yeah.
have those, so we have to do some of those particular pieces. And then in 2022, we also are going to have to collect development charges for school boards, right? So
Yeah.
again, so we have that as well. So just so that council's aware of those.
Yeah, but
particular
we've
pieces.
got the nest egg there when those debts have to be cleared. Yeah, okay, thank you.
Okay, thank you, Richard. I believe that concluded your presentation. Is that correct? All right. Council's heard me say, well, 4 years in a row that I believe our decision on our budget is the single most important decision we make every year. These financial statements reflect on those decisions to see how close we came and what kind of a position financially the township is in. And so I certainly don't mind questions on this. It's important that just as important as we understand our budget process, it's equally important that we understand these audited financial statements. So Richard and Veronica, thank you. You've done a great job of presenting it. I know Sarah, I believe as our new treasurer, you are intimately familiar with all or most of these figures as you reviewed them over the past few months or longer. Is there anything, Sarah, that you feel as a treasurer that you'd like to, any comments you have or anything you'd like to direct council to?
No, I think Richard and Veronica did an excellent job presenting that. So I have nothing to add.
Okay, thank you. All right, so before we get to any appropriate motions, are there any other final questions from members of council? We'll see Deputy Mayor's hand up. Go ahead, Bonnie.
Yes, and I certainly will be prepared to make the motion when it comes. Just one further question, and to the Finance Committee, was there any questions that weren't asked that the Finance Committee, just so that we are all equally informed, that come out of the Finance Committee when you were going over it with Richard and Veronica, that you feel, Mayor Taylor, we should be brought abreast of?
Well, that's a tough question, but there were a few. There were a few. I asked a
I
question.
didn't ask enough questions, Joe.
I asked, I remember one I asked about the parkland fee was in the budget was zero, and that was explained adequately. Nick, as a chair, do you recall anything of substance that we?
I know that we had some questions around reserve funds and the specific increases on some specific reserves. I believe it was building and or planning, and the increases there. They were seeing some significant growth in those, and that was directly related to the growth in those areas. And so that was something that I recall us talking about and spending some time discussing how and why. But in general, yeah, I don't recall anything of substance that I would say that we need to make sure that council is aware of that discussion.
Right. What we did do, though, as we went through the presentation with Richard and Veronica, and questions would come up from these numbers, we made the comment that perhaps when you're making the presentation to council, you can elaborate a little bit more on this line or that line, and they have done that. So some of our questions were answered in their presentation due to some queries that we had at the Finance Committee level. So I think, Deputy Mayor, to your question, there's nothing in these numbers that I think we should draw your attention to. I think they've all been adequately explained, and subsequent questions have brought further clarity to it.
Yeah, no, I thank you for that. And it was a great presentation from Richard and Veronica, very informative, and certainly answered all the questions that I, to my appreciation. So thank you.
Richard, go ahead.
I guess the one thing, now that we speak about it, we did talk about fees and building permit fees, and the fact that under PSAB that your building permits are recognized when in essence when you start the permit. So as CAO Greg indicated earlier, there were some prepayments on things such developments and by developers. So therefore, that's why that one reserve increased, because of course you collected the fees, but you normally then will do the work later. So therefore, the reserve will help cover those costs when you do the work in subsequent years.
Right. Anything else from members of council? So I think, Heather, what we really need from council, if they're willing, is a motion to approve the audited draft financial statement for 2021. Is that correct?
Correct.
All right. If council's comfortable with the presentation and the numbers, and they're willing to entertain that motion, I would be looking for it. I see Deputy Mayor's hand go up. You're willing to approve the audited draft financial statement, and Councillor Powers has seconded it. Any further questions on that? We'll call the vote. All in favor? Carried. Richard, Veronica, Sarah, thank you very much for the work. In hindsight or in retrospect, even though 2021 was a difficult year financially for our township, we did okay. We certainly did okay. We stayed on solid footing and increased our financial position. So I think from that perspective, we need to thank staff for the direction, their leadership, and we need to thank council for the decisions that we made. So all in all, I'm pleased with where it ended up. So for that, I don't know that we need anything more. Heather, we've got the only motion that we needed from this particular meeting other than to adjourn. Is that correct? All right, good. So that's the next motion I'm looking for. Councillor Powers and Councillor Allen have moved to adjourn. All in favor? That is carried. Thank you very much to everybody. Appreciate being available this morning. And until the next time, take care.